Hello, my friends from the inner circle, and welcome to the probably most valuable video and most important video that I've ever recorded here for you guys. It is going to be a price action recap over the last couple of days. It was pretty crazy, to be honest. The last 2 days have been very shit, to be honest, also for me. It was not only because of the price action, it was also because I just made some big mistakes, especially on a higher time frame. That's why I wanted to go short, but my rules did not always offer me that to do it. I was super convinced because of that 1 4 hour bearish structure that the market needs to go to the downside. It was kind of a different situation because it was a really complex pullback. What the market did, in reality, it was not a pullback. In reality, what the price did is it really broke the structure, and this is why we are currently up here where we are. And today trading was much more easier. Still, I was expecting today some potential shorts, and I didn't took them because price didn't really give me the option to go short. So this is why I went today long, and I'm going to cover up right now today's price actions. As you can see, the trades from today have been very insane. This is my chart I shared with you today. We're going to go over this price action as well and the last couple of days as well. Very important, guys. I just wanted to make, before I'm going to start here, a quick announcement. I'm going to update the education part of the inner circle very simply because we're going to use some kind of things a little bit in a different way probably. So there are things which I didn't really mention too often in the course. Things about the week low, week high, we shop or we shape recovery. I just used different names for it. Probably some of you are confused about it, so I just want like to clear out things more. Also, the trading, to be honest, has changed a little bit, so I'm not sure about people who are here from the start. So we started the inner circle at the end of November, and since then many things has changed, to be honest. So we went more precisely on our entries. Earlier we had bigger stop losses. Right now we're really getting tighter and tighter. So you can see right now today 1.2 pip stop loss, here 1.4 stop loss, and so on. Just going to give you more details about how we can trade this approach in a more easier way. I think that the majority of us will benefit of it. So stay tuned. It will take me a little bit time to record everything. Probably it will be out during this week, and if not, then the next week will be definitely everything online. I try to keep uploading every single day at least one video, so that we really can end up with everything. And probably I will delete some videos as they are just probably too basic, or I just going to make everything a little bit new. So I'm not sure right now how I will do it, but keep in mind that some things will change, and hopefully that you're also excited for it as I am. And I would say that's enough. So we're going to go right to the charts. Probably just one thing before that, kind of a mindset thing, because at the end it's really 90% mindset, which makes here the big difference in trading. We have the tools, we know what we're doing here. Yes, we can always grow here in trading. We can always find some refinements and stuff which will bring our trading to the next level. That's always possible. I'm not saying it isn't, but the thing is that whenever we have days like we had the last couple of 2 days, now today was fine, to be honest. Today was super easy to trade, but yesterday and the day before was super hard, to be honest. Also for me, can't remember that I had a day like yesterday since 6 months where I've had so many losses. I exceeded my daily loss, to be honest. So As you can see, nobody's perfect. Also me, I'm getting my failures, and today super happy that I did them because I really learned a lot of things throughout these mistakes that I've made. To be honest, I've never been in such an range, so it was really a big range on Euro USD. I was highly affected by the FOMC meeting, which occurred yesterday night, and yeah, we've been right with it because it really dropped. I'm going to go over that one, of course, in this video as well. But right now, what I wanted to say is just for everybody who's new to this channel, hopefully you're not scared right now about trading smart money concept, because I know you can get here many stop loss hits if you want. If you don't want it, then you can just quit trading for that day, to just take a break, go watch some Netflix, go for a walk, hitting the gym, anything like that. But I understand everybody who's trying to continue to get back their losses, to get back into profits and all that good stuff, because that's what I tried to do yesterday. Unfortunately, I got then one trade which brought me my losses back, but still I'm not happy for the day. So for me, the day was like I was super scared of everything, so just taking losses of the losses of the losses, and I just thought about, okay, what the fuck am I doing here? I know what the markets are doing actually, but still I took losses, and that was just shit. So I just realized all my losses afterwards. But it's good. At the end, I realized them, I learned from them, and this is what I'm going to give you right now in this video, so that we all can learn from it and that we can all grow here together. Okay, what I wanted to say as well is that, especially if you're new here and you just realize right now how strong the markets can be, especially like it was right now the last 2 days, don't get scared of it. It is part of this business. This is why at the end, not everybody will be successful, because the majority will just quit. They will just look at it and will say, okay, SMC doesn't work, or trading does not work, and all that good stuff. So the majority will quit, and that will make the difference, because there are people who accepting that nothing is perfect in this world, and they're just keeping pushing. Failures are not a problem. Failures are good, because we can always learn from it, and this will bring you to the next level. The problem is just if you will get stuck in your failures and you will just try to get out of it by trying to change the whole system, because you say the system is not good. But not a single system out here is perfectly, especially in this system. What we have here, it's actually you, because you use it, and you are the one who needs to interpret here the story the right way, and that's all. The whole trading that we're doing is just interpretation. And if you didn't interpret it the right way, then you will take losses of the losses of the losses. That's the truth. So whenever you will face a losing strike, it's not the strategy, it is you. Because our strategy can be always interpreted the right way, but I know it can be hard. And with the experience, my friends, I promise you, everybody who will really put it into work, and consistency will make it a difference, will make crazy money out of this business. Just keep in mind, trading this just for 1 year, SMC, will completely change your world. Trading it for 5 years will change everything. So it will be just crazy. So I promise you that. I'm trading currently SMC around 1 year now. Before that, I traded retail concepts for 2 years. I mean, I've been struggling trying to understand supply demand from a retail perspective. That was just shit. So I just went in every OB. I didn't understand what BOS is and all that good stuff, what liquidity is. I just thought about, okay, my supply zones is actually already the zone where the professionals are getting in, and the retailers are just getting in support resistance. Now it's just way more. If you just look right now at these charts, it's just way more of that good stuff here. So it's not that easy how the majority are trying to sell you right now these cheap courses, how to trade supply demand at the end. Yeah, so hopefully I could motivate you a little bit here, because I know completely what you're going through. I mean, I've been part of it yesterday, then I came out of it. Still, the week for me is good. But yeah, it was difficult, and we just need to go through these difficult times, and then we will also have times where we're going to where we cannot save from profits. That's then the good part. Sometimes the bad parts, and that's just it, guys. Okay, so this is why I definitely recommend everybody to also, in their free time, go read a good book, watch some good podcasts. Will really bring you to the next level, my friends, because at the end it will be just mindset. Okay, so I will stop now. We're going to go right now right into the analysis, and I'm going to start here with a full breakdown analysis on the Euro USD. With the higher time frame, and here is everything what we need to see on the weekly time frame. The reason why the price is even pushing to the upside, it's this good thing here. It's the weekly level of demand, so price came into it. Now here, a very quick definition on what a supply demand is. A supply demand needs to break structure. Okay, that's the first thing which it needs to do. Otherwise, it's not a high quality one. So we mark here BOS perfectly. And this, I mean, look at this. It's breaking here more structure. It also breaks this one. So whenever you see something like that, that's more relevant. And it needs to take it needs to take liquidity out. Now on the weekly, of course, you will not see that very often as the weekly is super high. But at the moment, when we're going to go right now here to the daily time frame, because that's the way how we are doing everything, we're refining everything down. You will see here that price, before creating that supply zone, that demand zone, it took liquidity out. And that's very significant for a supply demand. This is how you can really get the best quality out of them. Of course, not every supply demand that we will use will do that, but whenever you have this into your favor, it will definitely be better for you to take these kind of supply demands. That's just are just the facts. Of course, sometimes we just need to be happy with any kind of supply demand, but whenever we have such one, it's a good one, a high quality one that will more than likely work out. Okay, so that's the step-by-step guide. After refining it to daily, what I'm doing is I'm refining it to the 4 hours. Here on the 4 hours, this is the demand zone. Okay, here on the 4 hours, we can already see that everything else that's down there is already mitigated. So you got here this 4 hour, you got this 4 hour demand, you got this one. So everything is just mitigated. Just because I got today asked about what mitigation is, so I think this video is pretty good because we will really go very quickly about all the good stuff. What they're doing here and is they're creating a big sell position. Okay, it's about order flow. We need to understand order flow. As I said, this will come during the week or next week. Extra video for order flow, for the V-shape recovery, for week low and week highs and so on. But the idea of mitigation in the first place is the way on how supply demand gets created. A demand zone gets created because a big bank is pushing the price to the downside so that he can target here liquidity. And liquidity does not mean always that it's retail money. It can also be hedge fund money. It can also be just the fact that buyers and sellers are changing position. So there is no demand in the market if not somebody is bringing the price to the downside so that somebody will buy it, So it's just the relationship between supply and demand which makes it attractive to buy it. So a very good example here is always to just look at PayPal, for instance. If you didn't check the stocks right now, very good tip. The price dropped from 300 to 100. Now, that means at the top of 300, there was no demand for it. So nobody wanted to buy it. But the moment when price dropped to the downside, right now at 100, there is currently a high interest for investors to buy it. And this is the same fact here in trading. This is what we call these levels demand zones, because in this case, they've been active here creating them. They've been pushing the price to the downside so that they can buy it afterwards. Now, they're not closing their demands, their short positions in this case, because they would like to just return to it later, and this is how they can close it at break even. That's the idea. If they really want to see price going up to the upside, they will come to it, return at it later on, close these positions, and they're going to push the price therefore to the upside, because automatically by closing shorts, it will be automatically buying positions, and that's the way on how the price will then automatically jump to the upside. Okay, so this is then the thing that price will return to them to close their positions. That is mitigation. And when the price already tapped into a zone, it has two options, the way and how it can tap into it. It can tap in the first half of it or in the second half of it. And that's the thing. If price could, for instance, if it were to turn to this, it's still an option that will go below it one more time. But afterwards, we do not expect it anymore to tap it. Even if it touched it one time, it doesn't need it to come all the way back down, because it will be a mitigated zone at that point. Okay, so keep that in mind, my friends. Okay, so now we refine it down. That's the way why we don't need this. It's important on a higher zone, but we refine it anyway all the way back down to a 30-minute zone. And this is why it's irrelevant for us, because we will just use this tiny zone there. That's going to be our demand zone. Here in this case, very nice. You will see that price has given you a nice liquidity. Okay, so I need to perfectly. So you got here this as strong liquidity, and price will use this liquidity because there are people buying it. Market will drop through it, and this is how they can then get the demand for the price to go all the way back up. So very simply, this is what the EURUSD in reality did there. And this is how we can refine everything really pretty tiny. And this is the way how we can get pretty nice entries. Okay, so everything starts here on the EURUSD. If we just look right now at this good piece that we have there. I will stay on a daily very quick because the IDs right now, the market is still bearish, so you got here, weekly. We need to go to the weekly. We still got weekly bearish structure because we broke structure down there. So technically, everything which is showing us bullish price action can speak against us, because price could anytime just drop off to follow bearish order flow. The thing is right now, that's just stupid to just go short right now, because the range is super big. The range is from here till down here. So the market can do right now whatever he wants during this whole range. And it will, it will. The idea is right now, if we go to the daily, that we can spot a nice supply zone right here. Now this supply zone is right now already mitigated. So price, look at this, it's already at the 50%, so it is above it. So this kind of thing will be right now automatically liquidity. And this will be declared as a weak high. Why? Because price reacted from the supply zone and it failed to go below the structure. So that means that this is a weak high, and it will be automatically target for the market. Now I know many traders will look at this area to sell off, and you could sell it if other time frames will speak for it, but it's just risky because price could easily go through it. So we are expecting it. Of course, price could just reverse from here. It's possible, but nothing very realistic. So in the majority of the cases, it will run this liquidity, and we always need to go with the probability. So this is here right now a very quick explanation on weak highs, weak lows. Let's move on to the 4 hours. But very quickly, what I forgot to say is we got here, for instance, daily supply, which could be a potential target. This supply zone here could be already mitigated, but as you can see, only the first half. So the second half could be mitigated in future. It will do it if there is some relevant 4-hour supply zone in it, for instance. But this one here, you can see pretty clear, it's liquidity for the supply zone up there, and everything upwards is just liquidity. So from my point of view, and this is the way how we should look at it, is because of price has broken structure, for the daily has closed everything. So everything starts here with a step-by-step mitigation. Here in this case, it even took out this liquidity, providing us here equal highs. I remember the days when I tried to go short from here and price took me off and then dropped like this. That was actually my swing trade that I planned. Unfortunately, the market got me out. But yeah, everything good. Price started here a step-by-step mitigation, as you can see. So everything up there here is just pure liquidity, and therefore, because the structure is bearish on the higher time frame, this is, from my point of view, protected. So for me, the last possibility where the price could go is actually this here, is this structure. From here, structure really starts to drop off. You could view it like this because that's the real supply, from here down. Need to check it on the lower time frames as well. But from here, price really starts to break it, and that's the daily structure. And I think that everything is protected, and at this POY, definitely I'm looking for shorts. Okay, let's move on to the 4 hours. Now in the 4 hours, you could, for instance, this one, just refine it. And I would use this because this is a good source of liquidity, as you can see. So it took liquidity and then it really dropped off. But keep in mind, this thing here is already mitigated, so it could really just come up till the supply. So for me, I'm only looking within the supply zone for a short, and up there we just need to look on the lower time frames if there is anything left. Okay, so you could use it like this perfectly. That's it. We're going to move on right now here to understand what the 4 hours did. And on the 4 hours, the whole story really started at the moment when it started to break this here. So it reacted pretty crazy at this demand zone. There was so much liquidity in it, so the price moved all the way back up, breaking some structure. And what it did here in reality was, it was just a step-by-step mitigation, creating demand zones, breaking the structure and creating this demand zone. Price gave us a huge reaction off of here. Here it tapped into this liquidity spot, and here is the real supply zone where everything started. So we will see it then pretty nice on the 1 hours and on the minute 15 that there is a nice supply zone where the price reacted off of it. But as you can see, price started to form bullish structure. Still, this kind of thing is part of a bearish structure on the daily. So structurally, it's up there or here. So I would say it's here because this is another part of it. So here, everything what the market does. So this is right now very shit because it's FXCM, but I need the other charts because I got there's so many markups on the past 3 days on the lower time frames where we're going to go into the depth of this analysis. But right now, important for us is just to understand there is liquidity. Price tapped into this liquidity. This liquidity was used, but as you can see, it was still part of this. It was part of this bullish price action, but price started here to break it. So we had here a bullish lag, and within that bullish lag, price started to break structure to the downside. Okay? So what we should look is always to stay in the lag that we are. Now, the thing is, you had here a 4-hour demand zone because price has broken it here to the upside. But this kind of thing here failed to break structure up there. And this is why we consider this, as I already said, as a weak high. So it's a bullish structure, but this one is here, it's also in addition liquidity. So basically what you can expect, and that's what we've been expecting, is that price could go bullish. Okay, this is what I said to you many times. I view EUR/USD bullish. The problem just was then something else, because price has broken it bearish and bearish and bearish, so it moved within that bullish lag. Okay, so within this and this bullish lag, it moved bearish. And what you need to see here is definitely price switching. That's what the price then also did. Problem is because you had this bearish range. Price needed to break it above. That's what it did actually today, and this is why we've been looking for bullish price action. Okay, let's go here to the 1 hours, and what you will see on the 1 hours is something pretty nice. It really follows everything. So look at this step-by-step mitigation here. There was some nice liquidity provided. Breaking structure, blah, 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 everything good, So following here everything, that's the bearish order flow, what it started to create. You can see, so if we just look right now on the minute 15, everything was bullish. So price was just respecting here the demand zones, as you can see, going bullish. This case here, it didn't it didn't tap into the demand zone, so it was kind of hard to get involved in any kind of long positions. But then here, the price did is, and that was a price action that I already covered up with you guys. Price has broken structure, so we've been part of a bullish lag on the minute 15. Price came into it, pushed all the way back up, and here the whole shit started because price has broken on the minute 15 time frame, has broken it, but it failed to go up higher. And this is why this kind of thing here remained as a structural point, which is just pure liquidity for the market. Dropped all the way back down, breaking structure, and since then EUR/USD was obviously bearish. So you needed to look after the moment when price dropped like this for some bearish options. Then it was a little bit difficult because price tapped into it here, into this. So that was the minute 15 supply zone that it tapped into it, not this one. It tapped into this one, not in this one. So we had a range mitigation. Everything was into the favor because price provided here a ton of liquidity. Came back down and started to break structure again, following bearish order flow, boom, 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 dropping low. And then here you had everything for it, So this is why we've been here longing EUR/USD. And as you can see, everything was provided in a very nice way. So I explained to you this price action already in one of our Zoom calls. So you can watch it for more details. I would just remain right now here in the minute 15 as we are very interested in the other good stuff from the last 2 days. And here you can see our price, from here it has broken structure. Came back down to mitigate this demand zone, pushed up higher, and this one was respected. Here it closed above it. Continued to be bullish. So the idea is, in a situation like this, price is here in a potential demand. Now that was during night. Price spiked below, but never closed below. So it was never turning bearish. It remained bullish. So what you should look for is price to continue to go bullish, because it has confirmed with this push up, it has confirmed bullish order flow. So the idea should have been to buy it. And as you can see, price then here the first time started to close above structure again, and it returned to this demand zone, and that would have been your first option to go bullish again. Then price, as you can see, continued to move up higher. Now, why is this demand zone not a good one to buy from it? We need to look at this time when price is there, also where the price is on the higher time frame, because the higher time frame on the 4 hours was still part of this bearish range. So within this bearish range, you need to look for price to go short. You cannot look for any longs, so you need to change your bias at that moment. You expect 4 hour to continue the bearish structure. Now, this kind of thing here had given you the power to go bullish. This one will decide, are we going to close above it or not? It's something which we cannot anticipate what it will do. It's right now everything good. It's good to go bullish, but it's also good to go bearish. Nothing speaks from something else. Price on the minute 15 tapped into it there, into this supply zone. And that's where the price reacted off of it. This kind of thing here was just used for pure liquidity. And here it has broken the structure. Okay, so you have got break of structure, price returns into it. What you could do is then here to refine everything down to a nice POI. So here, for instance, let's check if we see something good on the minute 1. That's this good stuff here, you know, so you can see here's some sort of consolidation. So what that is in reality is just, if you will check it out on a seconds and so on, it's just price breaking structure and mitigating all these supply zones, and it will provide here a ton of liquidity above it. So price could target that liquidity, but it also means that everything below it will be protected. And this is where price at the end went here, and it stopped there because everything there was just protected, because it's a step-by-step mitigation what the procedure behind is. Okay, so that would have been here for you the option to go short, because 4 hours spoke for that direction. We tried to go short here, I guess, the last couple of days. Was stupid because it's just obvious liquidity for this one. I was just too focused on bearish bias, because from my point of view, we went above this, above BOS, which is liquidity. Price pumped crazy, and I thought we'll react off of it. But as you can see, it just targeted as a nice liquidity, and then this price action was then a kind of stupid. At the end, it reacted off of it here, but you didn't really had here some good price action confirmation. The only thing what you can see here, it was a demand zone. It went below the demand zone, came back up, used everything as liquidity, and it used then this one. So here's something where on the seconds we can definitely find something. So if you go here to the 50 seconds, you will see exactly here a charge what the price has provided you, and that's one way of determining this as a supply zone, and obviously this and this as liquidity, and this is where price at the end came, started to move down lower, and you just needed to follow here in this case, as always, the bearish order flow. So price just really broke structure, and it just moved step by step to the downside, breaking structure, potential re-entry here, price never came to it, potential re-entry here, that was close, potential here, didn't came to it. So just, it was not super easy here in this case. Sorry, that was wrong. It's this one that you needed to use. That was the real supply for that day. So as you can see, price is just, whenever it's breaking, you need to understand where the real structure always is. And here, this one, this candle was responsible for breaking it here. So that's your supply zone. This is where price returned. This is where you should get your entry. That's it. Price dropping. You can see here, for further confirmations, BOS. Your entry. Boom. Okay, so let's just stay out at minute 15 a little bit so that you really understand what I mean. You can see here also in the minute 15, that's your supply zone, Remember, wick down, wick up, price breaking structure, remaining supply. That's what we see there. So price actually returns to this minute 15 supply zone. So it was just stupid that day that I didn't really recognize this kind of good stuff. But this is obviously liquidity. This is in the extreme. Extreme is always the best. Okay, of course, not always the extreme will work. But this kind of thing, and that was my problem that I had, was already mitigated. Okay, so I'm not saying that this supply zone is not good, but this supply zone was already mitigated. Okay, and price didn't close here below the structure. In fact, it was just used as liquidity. If it would have closed here below, then the idea would have been from this new created supply zone to go bearish, obviously. But this is not what it did. So obviously it took liquidity in order to bring the price to the upside. And what it did here was just a little bit of manipulation. But we should not care about this because it was at night, the time where we don't trade. And it was also not really confirmed because we would like to see price giving us on the minute 15 at least a charge or anything like that, tapping into giving us some nice price action confirmation. So I'm not even checking it out right now. The best is always to see at least on the minute 15 a charge or anything, or a BOS like it is here, so we can really expect price is ready to continue this bullish order flow. And this will remain bullish till the moment where price will go through that demand, through the structure, breaking minute 15 back down. Now, in an area like this, you can anticipate that the price will do this. Very simply, why? Because you got 4 hour supply zone. So this kind of good stuff here is a supply zone on the 4 hours. And it is a minute 15 supply. So we refine it down to the minute 15, and then we refine it down to the minute 1 so that we can get our entries. And what the price there did is actually giving us price action confirmation. Price then dropped all the way back down. Okay, it's just very easy right now if we look over it. But that time we didn't really recognize that, as we did a lot of failures. But look here, also here, price mitigated this, giving a liquidity here. Then obviously this is liquidity for it here. So there was still a possibility for something. So my idea also that time was we need a step-by-step, we need a 50% mitigation. But actually in reality we tapped into this zone 2 times already. And possibilities also to use this zone as well. But good. Let's come back. So price is just dropping. So there was a nice entry. not a lot of options, as you can see, because price didn't really give us the option to enter it. If I'm just checking right now this one, price has broken it here. For me, this would have been liquidity. As you can see, it used it as liquidity. So it's the same example what I explained, but it didn't really tap into the supply zone, So getting an entry there was definitely difficult. What you could have done is like this. Okay, because this is your wick. Okay, it's just not very clear, but that's it actually. And you understand, because from here price broke like that. That's actually your entry that you could have been choosing. But early on, there was definitely no short entry up there, only this one. So as you can see, a lot of options possible on the way on how to trade it. And here, because price has broken structure here again, you follow the bearish order flow. And that's it. So it's at the end pretty simply, because at a 4-hour supply zone POI, you can expect price to give you something. And that's what it gives. So then was the moment when price on the minute 15 has broken structure, continued to go bearish. But now the interesting part started. This here is liquidity, because everything is mitigated. There's nothing, there's really nothing. There's only this one. And that was something which I shared with you in the morning. In the morning I shared with you, I'm looking to short. Why? Price, in the first place, was bearish because of the 4 hours, as we said. Price started from here, a strong move down. Returned to this only supply, the only supply which is available there. So let me just delete this. Look that it looks more cleaner. This is liquidity. Price returned to this supply zone, and it gave me this BUS. And I thought about, great, I'm going to look at the new created supply zone to go short. Now, what was against me? That was something very fundamentally against me at that time. What was against me was that price didn't broke below this one. So the structure for this thing here was here. Price wicked below it, and it used these equal lows here as liquidity to bring the price all the way back up. That was the whole plan. If you follow right now here, for instance, the 1 hours, then you will see that this is a 1 hour demand zone. And here it has closed. This is obvious liquidity for it. So in the 1 hour, everything looks more cleaner, Not looking here at this demand zone for buy from a 1 hour perspective. I mean, you could have done, because it's already in the premium, in the discount zone. You could be an option. So here also I'm looking to be in that zone at least. Could have been an option, but as we already expected here, due to the supply zones, this is super expectable that price will do that. But my problem here was that I ignored this demand zone. It wicked below it, but that's not a problem because it didn't close below that demand zone, so it didn't give us a shift in structure as well. And I just thought about the whole time, I won't like to come all the way back down here to get the power from this demand, and price will go up higher. That was my target, and that for my trading style was, or my trading ID for the day was, I would like to sell it into this zone. So that was the ID, but that was wrong because minute 15 didn't really give us the options for it. I mean, this trade is completely fine. If you went here short like I did, that was fine because price could have really gave us this kind of movement. At least what it could have been doing is price to drop it at least till this new created demand zone, and then from here to take off, because it really gave us here a big short into this liquidity, and this one was not mitigated, but what was mitigated at the end was, yeah, the range, but it was not even this demand zone mitigated, so it left here a ton of liquidity. And I thought about the moment when price here has switched bearish, that we will go bearish. Plus this supply zone here looked pretty good, and I thought about, okay, it will return to it. In reality, what was wrong about this as well was price tapped here once, twice, third. So everything was already mitigated. Yes, it is a new supply zone and it has broken it, and that could have been really the potential for it, but it already tapped into the supply zone 3 times, so it's already decreasing your chances. But in future, I would still use it, to be honest. It's up to you how you're going to do it. That if you would have been understanding that kind of thing, then you could have said, okay, no, that's not for me, the zones that I'm looking for. I'm more than likely looking to buy it from here, and you could have been protecting yourself from one loss, So that's kind of the way and how you need to implement this strategy for yourself. Okay, great. Now, what price is doing is it's targeting this liquidity to came up higher. That was the FOMC, right? Exactly. Okay, let's switch now finally the charts down here to come up here on what price did. So exactly same kind of good stuff. Just mapped out here some things. Here, that's the first time when I went short. Let me just rethink a little bit what the market did. Here, that was liquidity, as I explained. Price targeted that liquidity, and my problem was I was just looking here for short. In reality, what the price here did, especially after this, going up higher, it broke structure, my friends. It had broken structure, and you need to follow at this moment the bullish order flow. That's what you're supposed to do. So price is moving on, and you need to find here just some options where you could eventually get involved in any trade. For longs and not for shorts, like how I did. Because M15 was bullish, so why should you expect price to go bearish? So it was stupid. It was super stupid. Here all the time, price has broken structure. Breaking and breaking and breaking it. Here, no options to get involved in any long. What I did is, oh yeah, I'm looking for shorts because we've been bearish structure on the 4 hours. Let's go down. Stupid, super stupid. It was just not correct to do it. I just thought, okay, I found here something because it's bearish, but it needed to break this here, and then yes, then it would have been right, but it didn't broke that one thing. That's what I simply just ignored. Then price gave us here some options, as you can see here, clean liquidity, nice demand zones, so you can refine this one pretty good. It's a 1 minute demand zone. Here price gave you charge, to follow here bearish order flow. Also nice possibilities to get here short. So I entered their shorts. The way and how I entered was after that charge. Price given us here BOS. From here, it really broke this structure. Okay, clean. Hope you understand this. And what this has remained, it left us here with this supply zone. Now it's up to you. Are you going to use it like this, which is not even a pip, or almost 1 pip? Yeah, 1 pip. Or you use it like this because you got here, that's the real thing. You got the bearish candle, so it's the whole thing here, the supply zone, and that was actually my entry, but I didn't close it down there. I thought about it will just go crazy more short, and then went completely against me. What price did is, and this is what you should have been doing here, guys, is to long this shit, because you had liquidity in your favor. You got the 1M demand zone. That could have been here your first potential risk type of entry. Then we could continue, and remember, you are here on the minute 15, and that's the whole key of it. You broke structure. You are in a bullish range, and here, this was, your liquidity for this unmitigated demand range. That is the whole idea. So it's very simply, I don't know why I didn't recognize it. I understood the fact that price could go up higher, but I thought about because price has broken this. And that was, in this case, the whole mistake. And the way on how everybody can interpret it in one way and the other one is I've seen price breaking this. I thought about this is my new supply, and I was so convinced about bearish stuff because I thought about, okay, that's the top of the 4-hour supply zone, and now we need to really go short. So I was just too focused on the short instead of understanding, okay, but price could just use this liquidity and it could just pump up higher to go up higher in that range. But yeah, it's not easy. It's not easy because it could have been really possible that price will drop to it. The best option in a situation like this, very easy. You're just hatching. I don't know why I didn't. I'm also not doing it very often, but in a situation where it is helpful, why not actually, guys? So I definitely recommend you to hedge whenever you see the option for a hedge. So long, and then you follow price action. I mean, look at this. It's so easy. BOS, liquidity, demand zone. Boom. It's taking off. Here, re-entry possibilities, price respecting supply zone, reacting off of it, creating new demand zone, and taking off from it. Boom. Liquidity being provided. Boom. That was just my that have been just my notes for my shorts, because I'm also checking always out what speaks against me, and I just thought about here at the moment here, whether I respect the supply zone or not. And when I've seen, okay, that's the last time already here when price was here, I just had a very bad feeling because I just noticed, oh god, this shit could take off like crazy. And then boom, man, boom, it was so quick. So I just didn't lost my hope that price will, I just thought about potentially will mitigate right now this upper zone up there, which was stupid that I thought that this could be an option. I could have been just putting at least my risk to entry. I mean, after such a crazy trade, it was a good one, but yeah, I was just already blind due to my whole losses that I made, and then price, boom, went up all the way back up. Minute 15, even closed above it, just to trap more liquidity at the end. That was the whole point of it. You've been at the top of the 4 hours, and at that moment, you really mitigated everything, taking out this liquidity. Everything just really spoke for shorts. That's what it did. So you can see it was really complex because M15 was bullish. It turned 2 times bearish. These 2 times I completely understand whenever people trying to go short. But yeah, it already, in this case, it just mitigated, the supply zone took off and the liquidity was gone, and it was just used for it. So ideally, you could have been closing it already there. Ideally, you would have been taking a hedge trade, and you would just making crazy profit at that day. So here, really closing would be the best if you understand to close your trades after certain targets. That's why I didn't. I was just too, should I say, I really wanted to make the big profit that day because I was so frustrated of losing so many trades. And that was the completely wrong mindset, and that's the point of trading at the end. Wrong mindset, wrong trades, wrong money at the end. Okay. Boom. Then price started this good stuff, so started to drop down afterwards. This is where I got in my next trade, and I closed this trade at 8.3. Here is where I close it. I made my losses back. I was scary at that moment that I would even hold it. I thought about, oh my god, I'm going to lose the next trade. Yeah, I would have been winning it. So my profit was really down there as I planned it. And the minute 15 demand equal lows. That's why I planned. So that would have been also a target for me. but more than likely I thought about this will be the target because it had equal lows in the order. This one was one, but not the best one. Why? Because from here price didn't really broke structure, so that's actually the whole point why this was bullshit, because this one, that's what I forgot to say, is it didn't really broke structure here. That's, I guess, or am I right now telling you shit? It broke structure. Okay, that's right now, that's a cheeky thing here. That's always a cheeky thing. So the way of how you interpret it at the end. But yeah, as we said, potentially already mitigated this kind of thing. It could be a break of structure. It could have been still a target. Yes, at the end, it really just took this out. Okay, good, fine. I agree with that, and it's good. It's following at the end the bullish 4 hour, which I mapped out here early on, and this is what we are currently there where price is. Okay, now we need to go over today's price action. And today's price action was pretty easy to understand. I mean, never trading this kind of thing, never trade this kind of thing, but we woke up, and when we woke up, we've seen this nice BOS. So price has finally closed above this bearish range, and this is right now really respecting everything. So it means right now, yeah, we will take this shit out. We will take it out. Yes, it could drop off of some levels from here, but in the best case, we will take the shit out, and that's what the price is currently doing. I closed my trade earlier. I planned it like this at 80. I just thought about, I'm done for the day. I could have been doing high today like this profit. How much? 1 to 60. Could have been possible. Was just too scared to do it after this strong week. And I was happy with this trade and this trade, and I thought, okay, come on, man, come on. It's okay for today. I already showed the market who I am, and I'm happy, Okay, today we wake up, BOS, everything is just speaking bullish because of the 4 hours has broken it. Yes, there was a demand zone potential for a price could have been gone. Here you can see the price actually then has broken here something else on the minute 15. And at this moment, everything should change for you because it has providing you here liquidity and a new demand zone, and it's following this new order flow. So this is currently the order flow. This is where price is moving. So here, what I did, and this is what I missed, unfortunately, I guess that was time where I was still sleeping, yes. As you can see, 1 minute demand zone, the only one which is reliable in this case, because here you had this liquidity. From here, price has broken the structure, so you can see how relevant it is, the origin of the BOS. And price started to move on, and you had here some options, to go today involved in another trade. Because what you've seen is here, price following bullish structure, and it gave you in the minute 15 charge here. It gave you M15 charge. And this is something which in a situation like you can see right there will just speak for you, my friends. So BOS or charge, everything is always in your favor. So, sorry guys, just need to drink something because it's a very long video. So, M15 charge is just speaking in this situation for you. And at the end, it was not only a charge, at the end it was a BOS again. So price really has broken you. So it started with a charge, sorry, that's my mistake right now. But I just wanted to share with you, for instance, it could just wick above it and come down lower, and you could just look for a nice entry again. So it broke structure, and then what you're looking is within this good stuff here, you're looking for an entry possibility. And if you look at it and you look at this range and you start to look at premium, where you should look, you can see this is obviously already mitigated. It's liquidity. So you only got this zone down there here and this one. So you got two potential zones where you could look for price to come to it. That's it. At the end, it came to this one, breaking from your structure. Okay, so risk type of entry would have been my go for it. So I just missed it. I didn't recognize it, to be honest. But what the price is then doing, it's following now bullish 1 minute, coming down, and there you got a demand zone. That's the nice demand zone in this range. If you move on the minute 5, I think you will see here probably something. Eurist is pushing, guys. That's crazy. Why didn't I hold it? Where am I? Yeah, look at this. So it's really living this. So it came in a minute 5 demand at the end. So this is how you can also check yourself. Okay, are you even determining something correct in this range? And you see, yeah, minute 1, and here on the seconds. So if you will go here to the seconds, look at the 5 seconds. You will see here on 5 seconds, price is giving you charge and creating here a new demand zone. And this could be potentially right now something which is in addition confirming your entry. So from my point of view, if I see here a charge on 5 seconds, I just would like to see anything, because in reality, what price is doing whenever he does like a demand zone, it would just go through it like this. And then in a price action like this, you would never get involved into it. But what you can see here is price giving you charge. And at the moment, it's creating here a demand zone. And what you can do is to place your buy limit at this new created demand zone and just move your stop loss below this range. This is the way in how you confirm at the end this demand zone. That's it, Potentially you could even, really use here something like this, or you use even this kind of thing. 3 options, but I will make a video for this because it will be too long for this one, okay? But yeah, just to show you a little bit of the second entry, because what I did today was also second entries. That was one trade that I share with you. This is why I refined it that crazy to 1 pip. Yeah, let's continue. So that was the first potential trade which I missed. Of course, target at the next supply zone, or yeah, the supply zone. Then what happens? Price moved up higher. And that was my next option where I was looking for something. So here that was a minute 15 demand. So very quick to show to you. Minute 15 demand. So I'm speaking about this one. From here, exactly from here, price went up higher. But what I forgot, but yeah, I was aware of it, is this demand zone. And this could have been easy liquidity for it. But what the price did, from here, it went up higher and it had broken structure, which means this one could just continue the bullish order flow, and the zone was definitely in premium, so I'm definitely looking at it, but I'm waiting for additional confirmation. So here I don't like the risk type of entries whenever I am in a zone where I don't know what I would do. And I share with you here, guys, okay, mitigated and mitigated. Okay, so this is obviously liquidity. As you can see here, it really used it as liquidity. But then something interesting started to form within this minute 1. We had liquidity. Price started to break structure. Okay, price formed a new demand zone. Okay, price continued to break structure. Okay, and I got 2 entries down there at these demand zones. Price pushed to a supply zone. This is the same thing which I explained to you. This is this kind of protected supply zones because step-by-step mitigation. This is why you got here the supply chain. Sorry, exactly, that's the word. I just forgot it today completely. So nice supply chain. Obviously, the extreme will be protected. And this is why I protected exactly there. The last supply zone possible. It's in reality this one. but what I mapped out was a minute 5. So this is why it was right now that big. And then price, boom. What I did is, because I was aware of it, I placed here my buy limit, my friends. And this is where price just pushed, boom, all the way back up. In this case, as you can see, whenever you got such a price actions, I don't know if you're at the charts, when you see this shit here, place your buy orders, buy limits immediately, because everything will taken out, but the extreme not. This is what it did. Because here you need to wait a long time till you get your BOS and your charge. But yeah, this is what I was looking afterwards. I just thought, okay, I got that trade. I will get out of that trade because I'm going to get a new entry for that trade. So price came up, mitigate some supply zones, and we got here a minute 5. And this is an interesting one, because if you look at the minute 5 and you also check minute 15, and that's the interesting part of it, because minute 15 broke structure. Minute 15 left you with that big wick as well, but we know that here below that was mitigated. We know that's a big strong move down, so I would still use it as this one, and this is why I did it like that. Plus I came to the minute 5, and as seen on the minute 5, from here price broke structure, and obviously everything below is just liquidity, but still I mapped out this here, which could have been a potential demand zone. Could have been. Okay, price then came to this level again. Look at this, take liquidity, breaking structure, the same thing, return to this demand zone, providing me extra liquidity, and I got in this trade. Easy. I took early on the first trade, and that was at this demand. And when I've seen it, that price took me off and gave me already that reaction. I was aware of, okay, this shit will fly. This shit will fly. Because I was aware of this demand zone down there. That demand zone didn't broke the structure at all. That was my problem for it. But still, it's valid because it's a demand zone. But that was not the significant part of this whole trade. The significant part of this whole trade was at the end. The prices provided us, after reacting here so often, it has provided us here a charge. That was the significant part of it, because it still showed us price is about to move up higher, came back down here, and what I did here is on a 50 seconds, because I don't want it to get such a big entry. Already here you could have been mapping out on a 5 seconds, showing that with you, but I will be in an extra video. You can see 5 seconds giving you here that break, return to the demand, and that could have been already your first entry. So that's the way and how you could have been confirming right now in this way this demand. This is your demand chain on the seconds. Furthermore, here the same kind of thing. You don't need to wait for a BOS, you could wait for a charge as well. So here what you got is charge, and that is your entry, and price moving. That's how I took the trade today. That's why I could have been affording to take a 1 pip, 1.2 pip stop loss. Okay guys, then finally, this is what I didn't share with anybody. I took here a small position as well. It was a quick trade. I just thought about, come on, follow the bullish order flow. I was so sure, I was really sure the price will move on. But then here I was, okay, I'm done. I was done with the day. So that was my mindset, which was here against me. Look at this. Look at this. Look at this. Look at this. We will take it out. So guys, thank you for attention. So hopefully, I really hope that this video brought you a lot of value. So really took me right now a long time to explain everything. As I said, it's also for me always a big learning to explain you this stuff, so it's also good for me that I can share with you this kind of good stuff here. I hope that I will bring you right now with this education video, your trading definitely to the next level. Right now it's your turn to bring everything into practice. Go to the charts, apply it, reflect it, back this whole price action again till you get it in your mind, and then we will rock the next couple of months like crazy, my friends. So I wish you a nice day, and I hope that you all find Bye bye, my friends. See you in the chats. I really enjoyed the time with you. I really enjoyed. Thank you for everything that you're making this possible. Bye bye, my friends.